Okay, so let's talk about SoFi. The business itself, it's on an absolute tear. But the stock, that's a whole different story. It's basically a battlefield. This isn't just about fundamentals. It's a high-stakes tug-of-war. And we're going to break down what's really going on.
So you gotta ask, right? How can one person look at SoFi and see this incredible fintech powerhouse, while the person sitting next to them sees a super high-risk gamble just teetering on a knife's edge? Well, the answer depends entirely on which story you're following, the story of the business or the story of the stock.
So here's how we're going to break this all down. We're going to look at the two very different sides of SoFi. We'll dive into the long-term growth story, then switch gears to the billion-dollar battle happening right now, and finally, we'll see what's coming next that could change everything.
All right, let's get right to the heart of it. We're talking about a tale of two SoFis. And I'm not kidding. It really feels like we're analyzing two completely different companies that just happen to have the same name.
Yeah, check this out. On one hand, you've got the business itself, and the numbers are just undeniable. Customer growth is through the roof, revenue's climbing, and they're actually on a clear path to making real money. But then you look at the stock chart, and it's like a totally different universe. It's this super volatile war zone where everything, and I mean everything, comes down to a single price thanks to a massive bet by some big-time investors.
All right, first things first. Let's put on our long-term investor hat. Let's just, for a minute, completely ignore the day-to-day noise of the stock market and focus only on the business. What do we see? I mean, look at this. The growth is just staggering. Seriously, SoFi is adding almost 1 million new members every single quarter. That's a pace that tells you something big is happening. Their all-in-one app, where you can bank, invest, get loans, it's clearly hitting the mark, especially with the younger crowd that wants everything in one spot.
And here's the proof that this isn't just about vanity metrics. Those new customers, they're bringing in the cash. This chart shows it perfectly. That growth is turning directly into revenue. We're talking a nearly 40% jump in just 1 year, getting super close to $1 billion in a single quarter. Now that is the kind of number that makes long-term investors really pay attention.
And this kind of growth doesn't just happen by magic. It's all being driven by a huge ambition. The CEO, Anthony Noto, he's on the record saying he doesn't just want to build another app. His goal is to make SoFi a top 10 financial institution in the entire country. And when you look at how they're executing, you can tell he's dead serious. Okay, but here's the thing. For the long-term story, there is a catch. You're paying a pretty steep price for all that amazing growth. A price-to-earnings ratio of 50. Well, that's way higher than a classic bank like JP Morgan, which is sitting around 12. So what that tells you is that the market has already priced in a ton of future success. If SoFi messes up, even a little bit, that high valuation could become a real anchor.
Okay, so take off the long-term investor hat and put on your trader's visor. Because the short-term story, it doesn't care about PE ratios or what happens in 5 years. Nope, it's all about one thing, a single price on a chart where billions of dollars have basically drawn a line in the sand.
So to really get what's happening here, you need to know this one term. It's called VWAP. It stands for Volume-Weighted Average Price. Now forget the price you see at the end of the day. Think of VWAP as the real average price, because it factors in how much trading volume happened at each price. It's the number the big money institutional traders really care about.
And for SoFi, that key level, that line in the sand, is $27.50. And look, this isn't some random number a technical analyst pulled out of thin air. This is the exact price where a bunch of institutions just dropped $1.5 billion into the company. It's their cost basis, and you better believe they're going to fight to defend it.
So what this does is it makes the short-term trade almost binary. It's incredibly simple. You've got the bulls, right? They're trying to push the price above that VWAP level to trap all the short sellers. But the bears, they know if they can just break the stock below that $27.50 institutional defense line, well, that's a massive psychological blow. It could open the floodgates for a big sell-off.
So if you're a trader looking to bet on SoFi going up, the playbook is crystal clear. Let's walk through it. First, the foundation. The price absolutely has to stay above that $27.50 institutional line. That's non-negotiable. Step 2, the trigger. You'd look to get in on a confirmed close above $27.83, a recent resistance spot. And then step 3, and this is crucial, the confirmation. The breakout has to come with a big surge in trading volume. That's how you know the big guys are behind the move.
So you've got these two totally conflicting stories, right? You have the amazing long-term growth versus this tense short-term battle. So what's the tiebreaker? What's the X factor that could actually fuel the next big move and maybe even end this fight? Well, it all comes down to innovation.
See, SoFi is trying to build a competitive advantage, a moat, by offering something most other banks just can't, and that's access to huge private pre-IPO companies. Through a partnership they have, they're letting their members invest in giants like Epic Games, yep, the folks who make Fortnite, and the payments behemoth Stripe. And they're signaling there's more to come in hot areas like robotics and defense tech. This isn't just a gimmick, it's a super powerful way to get and keep those really valuable customers.
Okay, so how on earth do you put these two completely different stories together? Well, that brings us to the most important point of all. Whether SoFi is a good investment for you depends completely on which of these two lenses you're looking through. Let's just boil it all down right here. It's all about your focus. If you're a long-term investor, you're watching the business fundamentals, right? The customer growth, the revenue, and you're thinking about that high valuation. But the short-term trader, they don't care about the PE ratio. Their entire world, their profit or their loss, hinges on one simple question. Can the stock hold that $27.50 line? It's like two different universes for the exact same stock.
And that really leaves us with the ultimate question, doesn't it? The smart money, so to speak, has put billions of dollars on the line. They've drawn their line in the sand at $27.50. But what happens if they fail? What does it signal if the stock breaks below that critical level, especially on a lot of selling? What does that really say about their true conviction in that big, long-term story? That right there is the billion-dollar question that's going to decide what happens next for SoFi.